Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Dale H., Andrew C., Jonas Z., and Enoch S. Ted O'Connor has joined us on the show today. Ted is technical advisor and director at Plateau Energy Metals, a lithium uranium development company advancing the Falcaonia and Macusani projects in southern Peru. The company is listed on the Toronto Venture Exchange under the symbol PLU, and also on the US OTC markets under the symbol PLUUF. Mr. O'Connor, thanks for coming on the show.
Oh, thanks for having me. This is a wonderful opportunity.
Well, Ted, you're new to the show. Of course, Alex has been on a couple times, but you've had a long history in the uranium business. Maybe talk about your background, talk about your time at Cameco, and your thoughts on the uranium market at this point in time.
Yeah, so I've got about 30 years of geological experience, and 25 of that has been in uranium specifically. I spent 20 years with Cameco as an exploration geologist, and then ended up as director of corporate development. And throughout that 20 years, I had the opportunity to review projects on a global basis, trying to get Cameco outside of Saskatchewan and into alternate uranium models in different jurisdictions. So my familiarity with Macusani region in Peru stems from that initial work. I first went down there in 2005 and saw the rocks for the first time and got Cameco involved. So Cameco is one of the predecessors, owners of some of the Macusani land that Plateau Energy Metals has right now. So I have a global experience in uranium and have settled on this as one of the top undeveloped projects in the world.
And Ted, talk about that for a moment. You know, for you to be able to get, Cameco interested in looking at a new jurisdiction for uranium like Peru, maybe just speak to how that looks as far as the quality of the asset at Macusani.
So we first went down there with a volcanic hosted uranium model in mind, and this would be looking for things like the biggest uranium deposit producer in Russia, Strotsovskoye it's called, and this thing has produced for 40 years, and well over 200 million pounds of uranium came out of it. So we were looking for large, low-grade deposits. Once the uranium price increased from the $7.50 in 1998, it started to creep up, and other models started to look interesting. So we went to Peru, myself and another fellow, and saw the rocks and got Cameco interested in partnering with a junior who had the land, and spent 5 years looking for and finding uranium and investing in the country. But the whole Macusani Plateau region was essentially a patchwork of about 5 or 6 different junior companies looking in the same rocks for the same thing, but in a real segmented way. And over the last piece of the puzzle was when I left Cameco, it was in a post-Fukushima world, and they wanted to divest because on their land it was fairly evident that they wouldn't get to a big enough threshold for Cameco to look at a new jurisdiction and a new processing facility. And at the time, the other juniors they only had, they had far less uranium on the books, so to speak. So at that point, it was about 40 million pounds of uranium known on the plateau. But one of the predecessors to Plateau Energy Metals, Macusani Yellowcake, was drilling with multiple drills, and lo and behold, after a year, they ended up with something on the order of 60 million pounds. So the last piece of the puzzle was getting Cameco's former land into what is now Plateau Energy Metals, and 1 plus 1 was actually more than 2. What started off as about 60 million pounds of resources on Makasani's side, and Cameco had 34 million pounds. We put them together and got rid of the borders because geology doesn't respect land borders. And we ended up with our current resource of about 124 million pounds of uranium. So what makes this area unique is that the rocks are quite unique volcanic rocks. They're only 7 million years old, yet the uranium is all less than 1 million years old. So we went down there with a volcanic related uranium model in mind, and through good science and observation, we were able to understand that the uranium has nothing to do with volcanic processes. It's a unique style of uranium deposit that's really not known anywhere else in the world, because the uranium is 1 million years old to 40,000 years old, so quite recently remobilized. And we were able to pin it down to groundwater, melting glacial waters that in the last million years plus to present circulated uranium from within these uranium-rich volcanic rocks and putting them into our deposits as layers and fracture coatings of what we call hexavalent uranium minerals. So the deposits were formed in this cold, high altitude setting that we're in right now, but without any, not much energy to get this uranium moved around and put where we are. So they're in a near surface environment, which is important for a few reasons, but it's easier to find because it's shallower, it's less costly, plus we can exploit them by open pit methods. And because the cold melting glacial waters move this uranium around, it doesn't take much to get the uranium back out of these rocks. So it has really positive implications for the processing. So we have extremely low cost potential production. We've done a PEA in 2016 that shows we can produce uranium for $17.28 a pound. And this is because of the really inexpensive processing.
Yeah, it sounds good, Ted. And I think that really points to a very unique project into a good market that obviously has a little higher price, and that also capital is abundant to obtain and develop out these projects. Also in a country that is working on uranium handling framework. So hopefully those things can be overcome as time goes on here. Well, let's go back to just uranium market in general. I'd like to get your thoughts on where we are in the uranium market at this point, your view on the price of uranium and the supply problems that are before us. Maybe just talk about that for a moment.
What we've seen in the last 5 to 7 years is real contraction in primary production. So far, that's been met with secondary supplies, reselling some of their inventories, and that's been a real problem that seems to be coming to an end. So secondary supplies or stockpiles or inventories, whatever you will call them, they are finite. They are being consumed quite rapidly. What a lot of people don't understand, I guess, in the uranium market is there's another step after primary mining of uranium, the conversion and enrichment. And what's happened with post-Fukushima, with Japan's reactors being essentially all offline, not only were they not requiring as much natural uranium, they were requiring less enrichment services. So that enrichment is a commodity that and a process that people that do it don't stop. So they have to keep their machines running. And so what they're able to do is take that natural uranium that has about 0.7% U-235 in it and put energy into the system to produce something that has about 3.5 to 5% 235 uranium in it. And so what these enrichers do, because they can't turn off their machines, is essentially squeeze the feedstock that much more, like squeezing a little bit more out of a lime or lemon to get more juice just by applying more energy. So they essentially displaced the need for even more primary uranium supply. So as we see the uranium, I guess the nuclear fuel side of things, there's more reactors, there's more demand for natural uranium, and there's more demand for enrichment services. So this secondary supply coming from enrichment, what they call underfeeding, is actually going down as well. So you've got a double whammy, so to speak, in that demand's increasing, inventories are down, and enrichment services are starting to increase on the demand side. So there'll be less underfeeding. So I think we're coming to a crux. And, on last week's Cameco earnings call, I haven't heard CEO Tim Gitzel for Cameco that optimistic in 10 years. It's all pointing to utilities needing to start contracting, and indeed they are, but nobody knows the price. It's a really opaque market, even more so now, because a lot of these medium to long-term contracts that people intimate about, they're off market, so they're not. There's no price discovery. No one's talking about price. But if you can read into what Cameco is doing by restarting Cigar Lake and McLean Lake Mill after the COVID shutdown, they wanted a certain price, certainly north of $40, and they must be getting it because they're turning it back on. So I think it's really come to a point where the utilities know they don't have as much inventory on hand, and they need to start contracting a couple of years ahead of when they need it, so the uranium can go on the Yellowcake Trail and go through the mining, conversion, enrichment, and fuel fabrication cycle. So it's exciting times. The price really can't go anywhere but up, because even to bring back some of the shuttered supply is looking like it needs $50. And our project, for example, we modeled it to produce 6 million pounds a year. Our break even is south of $25 per pound. So we're right in that, lowest quartile, lowest 50% of the potential cost curve. We're sitting pretty and waiting. And yes, we're waiting for this uranium legislation in Peru for transport and export of Yellowcake. We've been told many times it's a few months down the road. We understand it's been drafted. It just hasn't been signed. And then with the political turmoil that's been affecting Peru plus COVID hitting the country incredibly hard, it's actually sad. But anyway, things have been delayed. So we're optimistic, certainly on the market side, on the legislation side in Peru. Things are looking good.
Yeah, certainly Peru's gotten hit pretty hard with COVID and, of course, the political issues, and just the fact that, a lot of these countries in this region tend to run slowly and everything gets procrastinated frequently. So that's normal. But hopefully we can get some additional things progressed and done. And, back to the main market, Ted, I think the Cameco restart of Cigar is really their selection of the lesser of two evils. Them not having that on and having to procure in the spot market wasn't working, as they found out quite quickly earlier this year. So I think that the Cigar restart was really just a factor of, look, this is our best option. We don't like that option, but this is all we got, because they're between a rock and a hard place. The utilities, as you know, we're waiting for them to start recontracting in significant volume. The long-term contracting volumes over the last few years have been negligible at best. Well, let's move on. Let's talk about jurisdictions that you see having the most potential going forward for uranium, Ted. And I just include the U.S. here with your thoughts. Do you see that the U.S. still has good potential for a strong return to uranium mining, or do you see that it's really mostly expended through past mining and has limitations due to regulatory red tape?
I wouldn't say the regulatory red tape factors into most of the past producing and presently mothballed production centers. Wyoming and Nebraska, for their in-situ recovery deposits, they're all licensed. They just have to turn the taps back on. The unfortunate thing relative to Kazakhstan, where they use a similar process for exploiting their uranium deposits, in situ recovery. The cost is the issue with those operations in Wyoming and Nebraska. They're small. They don't really move the needle as far as production, annual production. We're talking 1 to 2 million pounds of licensed capacity for 2 or 3 of their operations. Cameco has 2 mills, and there's one other one that's quite small. So to me, going back to mining hard rock deposits to feed the Blanding, Utah mill that used to be Denison's, and now it's Energy Fuels. It's high cost mining. It's really selective, except for a few deposits that are licensed around the Grand Canyon. There won't be any more of those from, or many more of those from some of the red tape legislation and that you speak of. But I don't see the U.S. becoming a significant uranium producer again. They require I'll use round figures, something like 50 million pounds a year. I'm overestimating, but it's around 50. I think they can only get back to 5 to 6, and that's in a proper price environment. Yes, there's some new hope, I guess, with the 232 regulations and the whole strategic stockpile conversation, sourcing preferentially U.S. uranium. Even though they probably have a license capacity of something like 12 plus million pounds, I can't see it happening in the United States. There's only a handful of big uranium producing countries. And to come back to Peru just for a second, if Plateau was able to produce 6 million pounds a year, that would be about number 5 or 6 on the country scale of uranium production globally. So it really drops off from Kazakhstan, Canada, Australia. Then you start looking at Namibia, which things are relatively high cost, but also large production centers. And then you start going into Uzbekistan. Russia, you don't hear about much because their internal production stays internally. They don't really sell that. It's for their domestic use. It's not a great looking production pipeline out there.
Yeah, I agree. Lots of different issues, and until the price starts to recover, I think you'll have continually repressive conditions to where there won't be a lot of options until you see a much higher price, and then all of a sudden everybody's attitude changes. So we've got that coming down the pipe. Well, let's move on here. Let's talk a little bit about recent news, Ted, and maybe you could speak to the lithium project, Falcaonia, a little bit. But there was a news release that came out from a media agency that talked about potential for the company to have partners or is seeking funding or has funding in part to develop the Falcaonia lithium project. Can you just talk about that for a moment? My understanding is that's an unfounded claim by the media. But can you just talk about what's going on there? And will the company have any news coming on this front, say, before the end of the year?
I can say that the article you're referring to is actually false. We do not have any secure funding, and it's doubtful we will be releasing much on that front before year end. As a normal course of business, we're talking to all manner of people on the uranium side, on the lithium side, and on some of the potential byproducts from Falcaonia, most notably the SOP. We announced an interest from a fertilizer chemical company that wants to talk to us about either helping us technically or financially down the road to see about sulfate of potash production as a byproduct from Falcaonia lithium project. So yes, we've been talking to lots of people on all the commodities. Certainly nothing material to report. Everyone is waiting for uranium legislation for those that are interested in the uranium side of our story. We're, of course, in the middle of this legal and administrative process on some of our concessions. And without that certainty, both on the uranium legislation and the concession question, both the company and any interested parties are taking a wait and see attitude. We've as a company, our share prices suffered because of this concession issue, and we don't want to get into some highly dilutive partnership at this point, because we believe even with the current, we'll call it 2/3 of the Falcaonia resource that we do still control without question, that project is an excellent standalone. We did, in our most recent PEA for Falcaonia, we did the two scenarios, the entire project and just what's on the Falcaonia concession, leaving out what's on Okakasa 4, which is one of the affected concessions, and the project is solid. So from a potential partner point of view, nobody really wants to. Well, they want to wait and see what we're saying with the concessions and the process we're going through and how we believe things will be resolved in our favor, either administratively or through the legal system, that we handle that. And then I can only imagine that talks will ramp up with many different potential partners, but nothing really. That article was corrected, but it was also a similar interview was given to a rival newspaper in Peru, and it certainly didn't have anything like that. We need eventually to come up with something on the order of $500 million to build phase one of Falcaonia, and that was stated. And yes, we are talking to partners or potential partners, but the funding is not secured, and I don't see it happening in the next month and a half.
Appreciate the update on that, Ted, and the clarification. We'll see what happens. It looks positive, and certainly the assets not even remotely close to being reflected in the valuation of the company. Take us to the concessions for a moment. You brought that up. Can you maybe just update the audience on what the status is of the concessions? We know that some concessions came out listed at the first part of the month with the Ministry of Mines. Talk about that for a moment. What's the status, and what do you guys see as a time frame to potentially resolve the issues?
On the concessions, they were being handled by two separate courts in Peru. We'll call it Court 5 and Court 6, and two different judges. And those cases have now been amalgamated into one case. So all the concessions are now being administered in Court 6. And we are seeking an injunction that we understand could be coming anytime, but to stop the concessions from being awarded to anybody else, because we have this legal challenge about that we paid. The government, is the branch of government that's responsible for handling concessions, is a subordinate department to the Ministry of Energy and Mines called INGAMET. It's essentially their version of a geological survey that also covers mines, metallurgy, and concession administration. So INGAMET has accepted that we paid our money, but they now have issue with how the receipts were attached to the individual concessions. So we'll see. That's playing out. Our injunction is potentially imminent, and then it will go through continued legal process to reinstate those in our name. And we're confident we've done everything according to their laws and regulations and constitution. So that's positive. On the administrative side, either one of the head of INGAMET, the Minister for Energy and Mines, and the Vice Minister for Mines, or the President, so those three individuals can get their legal teams to understand the whole situation, which we've run through them many times. Unfortunately, we've had 4 or 5 different Ministers for Energy and Mines, and now the second President. And so those things keep stalling because of the turnover in personnel in those heading those departments. So the administrative side, people understand our story. They understand it was relatively egregious, wrong, but so far nothing's happened. And certainly COVID has basically shut down the government. And then when they did start coming back, they're working half time at best. Peru's a mining country. and their initial focus was not on our concessions and our issues. It was on trying to get the mining production back in the country, and we see that still hasn't really happened. Certainly not in the copper side of the story. It's they're not producing nearly what they think they should. So we've been a bit of a victim of timing with the government churn and COVID. So, but we're optimistic. Everybody knows our story in places of power, and understand that things were mishandled at the Ingamit level, and we're confident on that side too. So I hope that answers your question. We're confident that we will be our concessions will be reinstated without any nonsense. It's just a question of when, and of course we're hoping sooner than later.
Yeah, it's been a perfect storm. There's no doubt. And the COVID issues hitting Peru extra hard, one of the worst hit countries in the area. Of course, the need to get the cash flow from these mines going as quickly as possible, because I don't think sometimes the audience, some of them don't understand that how really important mining is, mining revenues to the government. It's a huge cash flow for the government bottom line. So, but definitely a perfect storm of delay, I would say. So hopefully you guys can keep that going as quickly as possible and get that restored. I think that's a big part of a valuation gap here that we're seeing in the shares. Ted, talk about the two assets being very close to each other, but obviously distinctly different assets, with Falcaonia obviously being lithium and Macusani being uranium, Falcaonia being the more advanced project and closer to possibly a development scenario. What is the company view on separating the assets to improve the value potential and to prepare for potential development of both projects? What's your thoughts on that, and what is the company looking at as a potential vehicle to separate the assets?
So the uranium projects at Macusani, they're geographically and geologically distinct from Falcaoni's lithium project. The Falcaoni rocks are slightly older, below the rocks that host the uranium. They're the youngest volcanic rocks on the Macusani Plateau. The Falcaoni rocks are underneath, older, different, and there's absolutely no uranium. There's like less than 10 parts per million uranium in the Falcaoni lithium host rocks. We also have, to the west of where we first discovered Falcaoni, actually right at surface outcropping the Falcaoni rocks, I'll call them. So there's areas where there's no overburden, no cover, and you get right into the Falcaoni lithium rocks. So they're geographically and geologically distinct. As you rightly pointed out, the concept is to develop these projects separately. There's not much crossover on potential partners in lithium or in uranium. There's very little crossover for interested parties, and the investor base is quite different, or can be quite different. So it does make sense to eventually separate these two projects into separate companies, and let them have their own path after that. I think the real catalyst for spinning off, we'll call it spinning off the uranium assets or separating the two, is the Peruvian uranium regulations, uranium production, yellowcake export and transport. That's one of the key catalysts for spinning it out. Another one would be a real increase in the uranium price due to contracting and a return to some long-term uranium contracting, where there's a clear need and path and to find a home for our potential production. Those would be the catalysts that I see for doing that. It totally makes sense to separate the two projects, and they do potentially have slightly different timelines, as you pointed out. The uranium requires the uranium market. The lithium the market will be there by the time we believe it'll be there by the time Falcaonia could come into production. So nothing hard and fast that we are going to do it, but it just makes total sense as you pointed out.
Ted, maybe talk about just briefly about the prior to, of course, COVID and the concessions issue. You know, the company was working on a revised PEA for Macusani. Can you just speak to that now? Obviously, this is probably down on the to-do list, but when do you expect the revised PEA for Macusani to come out? And as part of that, do you guys have any field work drilling planned for Macusani in the near future?
Yeah, so on the Macusani uranium project, one thing that it goes back to late 2013 and into 2014. Just as I was leaving Cameco, Cameco was doing some leach studies, and bear in mind they only had 34 million pounds of uranium resources, and some interesting work not only on the leaching and you know they were able to produce on spec yellow cake. There's no deleterious elements, but with you know very low potential costs, and they're in line with what the Macusani PEA as it stands from 2016 is low cost potential. They also did some what we call comminution concentration studies, where just simple screening and scrubbing of the Macusani uranium mineralized material, because we can't call it ore yet, they showed that initial tests, they could essentially double the grade. So they could retain 80% of the initial uranium from the feed material in about half the mass. And so what was modeled in our base case as about 290 ppm uranium feed material, all of a sudden you're talking something approaching 600 ppm, and that has a lot of positive implications for, you know, capital costs. You need smaller crushing and milling and everything else, and back end of the mill will be smaller because you're putting half the material through. So we've started doing some of these comminution tests, essentially redoing some, but also taking it further, and we're getting better results than what that initial Cameco study pointed out to. So the idea is, first of all, we can bring in some of the lower grade satellite deposits that were not in the original PEA, because we have 124 million pounds of resources. The PEA only basically took the closest 70 million pounds and produced 6 million pounds a year for 10 years. So there was, you know, that's including dilution, etc. We'll be able, if this work goes the way we're thinking it will, we'll be able to bring in some lower grade material and upgrade that to the point where it's exceedingly economic. As well, we have no immediate plans to drill at the moment, but what I mentioned at the beginning of the discussion was the patchwork nature of the history of the Macusani Plateau with its fractured ownership. And I can tell from my experience with Cameco, our best deposit, Tantamaco, we were marching towards the southeast, towards the project boundary, with Macusani Yellowcake that was marching to the northwest. And what we've seen when we put this into 3D space, all in one coherent database, is that these two deposits are on exactly the same elevation, and they should essentially coalesce. They are the same deposit, but we just don't have any drilling in between. So this is a focus, is looking in between existing, I guess we'll call them satellite, little smaller deposits that we believe are actually joined up. So there's more uranium to find there. There's also over 40 surface targets that we haven't even drilled yet. I guess some would say we're kind of like a northern pike. Once we saw something shiny, we were focused on that, and we drilled off where we found uranium, and we didn't bother looking too far afield anymore at some of these other surface targets that are untested. So there's a lot more uranium to be found, but there's some drilled showings that were drilled by one of the predecessor companies that don't have any resources on them because the QA/QC couldn't be proven and the drilling is a bit too widely spaced. So there's a lot of building blocks to increase the resources, and that's only going to help the project. So yes, we're doing this comminution work. We're going to see how it impacts the potential operating costs and capital costs through a revamped PEA, coupled with some exploration and extension drilling in between known deposits and on the fringes, as well as looking at some of these new showings.
And Ted, talk a little bit more. What about the time frame? Once you guys get this new revised PEA out, what do you see as the path forward on both time frame, and would you guys go to a pre-feas? Will you guys go to a DFS? What's the plan as you guys advance this, and what do you really expect the time frame to be, assuming that the uranium market starts to move? What do you think there as far as, if the uranium price is not an issue and we have COVID aside and concessions are resolved, what do you see as a realistic time frame to really get this thing to a level where you guys are ready to finance?
I'd say that the PEA, we're probably looking, if there was no issue, it would take 4 months, because we've done an incredible amount of work on the uranium story over its evolution. I think the latest PEA from 2016 is probably if I count one of the internal Cameco ones, it's probably the 5th economic assessment with some engineering behind it that's been done on the uranium side. We know a heck of a lot more. We've done thousands of leach tests. So a PEA update with looking at this upgrading of the feed material, coupled with potentially changing from heap leach, which the base case was, to tank leach, because things happen a lot quicker, and the Macasani mineralization processes so quickly and so inexpensively that we should be able to get away with small tanks relative to the potential production. So it's going to have a positive impact, and I see that once we step on the gas being a 4-month max issue. This is assuming we get the uranium legislation and our comminution work goes as well as we're thinking it is. And then you're looking at pre-feas, feasibility, another probably 2 years, and that's going to be some drilling, obviously, to upgrade the resource categories. Right now we're sitting with about 40% indicated and 60% inferred on the, I'm using round numbers, on the uranium resources. We need to get the indicated up to measured and inferred into indicated, and part of the plan. And a lot of people commented on the amount of work we did for our PEA as being almost at the PFS level anyway. So we're not convinced that we necessarily have to stop at PFS. We can maybe accelerate things and kind of blend into a feasibility study. So I think we're looking at maybe 18 months after that, give or take. So that's crude timelines, assuming all the stars aligned, as you mentioned, with the uranium price, etc.
And Ted, as we go here, the process to move into the permitting, do you see that happening in parallel to a definitive study or a feasibility study? Do you see that happening in parallel? And obviously with that 2-year time frame, do you see that also the uranium framework within the country, the regulations, gets resolved within that time frame? Do you see that really this 2-year time frame is really everything that would be needed to get to a point to finance and start construction?
I think that's achievable. I don't know how realistic the return of the uranium market in such a timely manner is going to happen overnight, but it's doable. And we've heard for the last year and a half that the uranium legislation would be in place within 6 months. We've now been told it's less, it's a couple months away at most. We understand that it's drafted and it's just hasn't been tabled yet. At the same time, Peru has to, it's fine to have the regulations, but they need to have a way of working with those regulations. And we're confident because they have a nuclear regulator already, they have a competent Mines and Energy and Environment Ministry, that it's not going to take much to add, some, I guess, radioactive element understanding to the already existing system. And that's indeed what the government has told us on the legislation side. Originally, back in 2009, people tried to initiate uranium mining regulations, and they initially wanted or thought that they'd have to essentially rewrite the Mining Act, which has been shown by the ministry that it's not the case. So I think the timeframes are realistic if the stars were aligned. And we certainly believe, presidential impeachments and elections coming up in April notwithstanding, we're confident that the rules will be in place ideally by year end. But we've been hearing 6 months for a year and a half. So I just point that out.
Yeah, certainly. It's been delayed, there's no doubt. And I think the uranium market will certainly be there in the 2-year time frame. But you would need a few things to get resolved soon and get all these processes going to stay on a good path. But I think 2 years for the uranium market would certainly be a much healthier condition. In the uranium regulation in country, again, it's not hard to borrow specification or regulations that have already been created by either neighboring countries, IAEA, and a number of others that have that information that is readily available. So it's not like you need to reinvent the wheel. It's already here. You just need to take it and implement it, which I think the implementation is the key for the country, not necessarily writing the regulations. Those already exist. So it's really about implementation at this point, and just, the formality of signing the documents is really what needs to happen. Let's move on here. What is your thought, though, on that, Ted, as far as them getting that done? Do you really see that this gets done in 2021, Ted, or do you think they kind of keep kicking the can until, kind of COVID's out of the way and some of these political problems?
It's hard to say because today, following the impeachment of the president, all of the ministers that were in the government have resigned. I just found this out just before we started talking. I'm not sure if it's in protest or if it's because the government's being dissolved, but they've all resigned. So once again, we're faced with either having a new Minister for Energy and Mines, or certainly the current one might get reinstated, but there's nobody at the head right now. So I'm certainly confident we'll have this regulations done certainly in 2021. But they've been drafted, and to your point, the governments of Canada, the United States have certainly been involved with helping with some of the regulatory, I guess, scrutiny and things. We do know that. We, as a company, have pointed and provided International Atomic Energy Agency best practices, a lot of which are already translated into Spanish. We've passed those along, and there's been some positive dialogue there. We understand that the rules are drafted and they just need to be tabled and passed. And we don't see any impediments other than the obvious political turmoil and COVID right now. So I'm confident that we'll get this done.
Ted, I want to come back to something you said earlier about the early exploration work on Falcaonia. You guys had hit some uranium up there when you guys were drilling out and delineating the lithium resource. Do you see that there's any need to follow up? Obviously, it wouldn't be critical right now as a to-do list item, but do you guys see that will be followed up, or did you see that uranium mineralization that was coexisting with the lithium? Did you see that was any issue that really should be followed up on? Did you see that there might be any potential for expansion, or is it just something that's not critical? What was your thoughts when you guys saw that?
Well, if I can roll back to October 2017, which is when we first got access to this the Falcaonia area, and it was through a community called Chacaconiza that's down in the south of our land holdings, and they had never really wanted us to come down and work. Um, and and through the course of our normal business up in the north on the uranium projects that exist, the uranium resources, the communities all speak to one another, and Chacaconiza inquired to the town of Isavia and the people that run that place where we have our base of operations. And basically we're asking about those uranium guys, like, and they were told, yeah, no, we're good guys. We do the right things. We don't fool around. We don't overpromise, and things are good. So the community actually came to us and said, how come you guys haven't come back and said you wanted to work down here? And said, well, you always slammed the door in our face. So anyway, we went down there. Within a week and a half, we found two large, we'll call it discontinuous, but essentially almost 1 or 2 square kilometers, two separate anomalies of surface radioactivity. So that's what got us to, we chose to drill at Falcaonia first. And what we found was some decent uranium within the top 50 meters of these volcanic rhyolites that host the uranium. Then there was a barren 50 meters. This is in the discovery hole, we'll call it. So 100 meters below, that's where the Falcaonia rocks start. So geologically distinct from the uranium rocks, but in this case below. And then we found these new rocks in November of 2017, and we analyzed them because they're essentially just white, fine-grained, glassy volcanic rocks. And it wasn't until we got the geochemical results back that we said, oh, this has 3,500 ppm lithium in it, because the rocks that host the uranium have about anywhere between 300 and 600 ppm lithium Li in them. So they're slightly enriched by world standards, but not a deposit necessarily. So I was the CEO of Plateau Energy Metals at the time, and we couldn't release those until we got them tested at another lab, because I thought it was maybe a potential lab error where they added a zero because things went from 300 to 3,000, ppm lithium. So anyway, the second lab confirmed the initial results, and then we started going away from the uranium at surface rocks and looking for these lithium rocks, because we have a lot of uranium, even though that got us into the area. So these radioactive anomalies that got us down to find Falcaonia, they're still there. So yes, of course, they're among our top priorities for drill testing. They are a bit far away from, I guess, the existing uranium deposit, potential production center. But trucking across the plateau is not that difficult once you're up on top. So there's a lot of uranium left to be found. I wouldn't say they're as high a priority right now as drilling off between our known existing deposits, as far as bang for the buck. But they're certainly in the mix.
And let's talk about some of the technical merits for just a moment on the project, and really maybe you can point out, if you see some, what are the key challenges to overcome with either of the projects, the technical challenges that you see as potentially coming down the pipe to reduce further risks, of course, and how you guys might address those. And then when it comes to the permitting side, what do you guys see as the most viable route for ease of permitting purposes, as far as the processing, heap leach, most permittable project, and then of course the key challenges you see technically to overcome?
Lithium in Peru is considered a non-metal. It's kind of treated like I guess we'll call it lime production. It's essentially a chemical process that produces lithium carbonate. It's a bulk material. It's considered a non-metal in Peru. So the permitting of operations for non-metals is uh, way more streamlined and shorter than we'll call it a metal mine, be it uranium, copper, gold, anything considered a metal. So certainly Falciani would be quicker to permit. We've been told it's instead of a 2-year sort of environmental monitoring and permitting process once it's started. We're already doing the environmental monitoring, I must say, on the uranium and on Falciani in the same environmental assessment work that we're doing as far as monitoring and et cetera, et cetera. That's been going on for years. But we've been told that a non-metal operation looks like a 6-month permitting window versus a 2-year permitting window for a metal mine. So it gives you a sense of how fast things could go with Falciani. So we don't see permitting as being any kind of impediment, certainly for Falciani. But because we know a heck of a lot more on the uranium projects, from a processing, we've done thousands of tests, etc. At Falciani, yes, we've done a lot, but we don't have the same, near the same amount of data on the processing. And because these are unique rocks that host Falciani, they're essentially a volcanic, fine-grained, glassy version. Chemically, it's quite similar to pegmatites as far as the parent magma that became these rocks. But they're fine-grained and glassy, so they can be processed more cheaply. What we don't have as much information on is the actual process inside. We've chosen warm acid, sulfuric acid leaching as our base case, but there's essentially all the other styles of processing that we've looked at. This material leaches, and it leaches quite well. It's just a matter of understanding the costs, the trade-off between capex and opex for some of these different processing methods that we've tested, but we don't have as much information on. So I see that as being, for Falciani, a key item to understand more. And I won't call it a risk, but an area we'll have to focus a bit more on is the processing of this Falciani material to understand the best option. We've provided a profound story in our base case as far as potential operating costs and a scalable project with manageable capital costs to become a globally significant potential lithium producer. So there's already a substantial case. We believe there's a lot of places to improve, and we have not, in our PEA, have not considered any of the potential byproducts. So we've started talking about sulfate of potash because these rocks contain 4% potassium. We're already, crushing it up and leaching it, and we know that 30 or 40% of the potassium is leached during our normal process, and we know we can get that off ahead of time before we produce our lithium. The lithium stays in solution, so we need to understand, okay, what would it take to put a little side SOP production, crystallizer off the front end, and some of the other byproducts like cesium and rubidium. Well, that's down the road, but we know it leaches. We know we can get it out. We just don't understand the cost implication. But, it's exciting. We've managed to catch the ear of some people who are interested in linking mining and agriculture. Certainly SOP is all imported in Peru, and they have a healthy and growing domestic demand. So these are things that we're going to be working on, but they're only going to improve the Falciani story.
Yeah, Ted, and talk about the uranium side. I think that's, Macusani is going to be a little bit more of a challenge, both on how you guys plan to process and also getting that permitted, as you guys go. But as you guys continue to move both of these projects through to definitive studies, Maybe just talk a little bit about the current resources and how you guys see that being expanded or increased as you guys continue to, do infill drilling and converting the resource categories into higher probability, categories. Maybe just talk about that, and then maybe just for an example, what do you guys expect to see as far as when you guys make those conversions and infill drilling? What do you see as far as approximate costs to be able to get that done?
Okay, so on the uranium story, the deposits are not as predictable as at Falcaonia. Falcaonia is, a lot of people have joked that it's kind of like a coal mine or a coal seam. It's predictable both in grade, not necessarily in thickness, but it's quite predictable. Where it is, and where it isn't. So it won't take as much to convert or upgrade the resource categories at Falcaonia, because to use mineral resource estimate terms, in the search radius is a heck of a lot larger at Falcaonia, meaning you can have more widely spaced drill holes. And I did a back of the envelope, with some science involved, to convert all of Falcaonia deposits indicated resources to measured, and all of the inferred into indicated. I just for drilling, I was looking at something on the order of $3 to $4 million. That's based on the fact that we have our own drill rigs. The company has 4 operable and 2 sort of for parts drills of our own, and the necessary staff when needed. So things are a lot cheaper than if we were going a contractor route. The contract rates in Peru for drilling are essentially similar to Canada. You're looking at something like $100 per meter just for the drilling. When you add in the analysis and everything else, and the camp and all the things that go along with drilling, that can be upwards of $250, $300 per meter. We've had good success doing it all in for about $100, $150 a meter. So substantial savings. So it's, we're looking at $3 to $4 million for converting all of Falcaonia, upgrading all of Falcaonia. That's the sort of quantum we're talking about. On the uranium side, the deposits are not as predictable. There's a bit more variability in grade and thickness, and you must drill these a bit more tightly. But when I looked at upgrading the indicated to measured, or at least a good part of it, because we're already sitting 40% indicated and 60% inferred, I was looking at something on the order of probably $5 million. The holes are shorter, but to convert all that resource, upgrade all that resource, that was the quantum. So a bit more expensive, but it's because you need to drill more tightly, and you also, but you have some savings because the deposits are within 100 meters of surface.
Talk about, Macusani and that particular area has a pretty good wet season, as most of us know in this region. Is there any impact there as far as, obviously there'll be infrastructure considerations for drainage and pumps and so forth for making sure that things are dewatered, but what's your thoughts on how this might impact some of the mining methods, and more importantly, also a potential heap leach operation at Macusani?
Yeah, so both projects are estimate 4,500 meters elevation above sea level. Yes, there's a wet season, but it's, you're correct, but it basically affects the lower elevations more with rain. Yes, we get a bit more up high. More often than not, it's snow. But every month of every year that I've ever been to the Andes in Peru, down in Puno, I've seen snow. So it doesn't hang around. It melts during the day, but the rain, it affects mostly the lower elevation. So we weren't seeing much of a impact other than, the obvious shipping down and into getting reagents up to site and shipping product out would be the most impacted by by the one big wet season. Up high, it's not really an issue. On the heap leach processing side of things, we did do a lot of tests up on the uranium side, up at altitude, right in sight, using the local water, and our results for uranium extraction were actually better than what we got in the lab and mini column tests we did in Lima. It just took a little longer because the ambient temperature is lower, obviously at 4,500 meters than at sea level in 20-degree Lima. But the reactions are not oxygen dependent, so and we actually got better recoveries. We're talking a couple 3% higher recoveries right at site than in Lima. So we're not contemplating any issues at those altitudes.
And Ted, how about joint ventures? What's your thoughts? I know that, with Macusani certainly has a less of a capex involved from what we can see so far, but what's the company's thoughts on joint ventures with other companies for both projects? Does that remain to be on the table? Can we expect this as the preferred route? And then do you guys see the joint ventures as a good way to accelerate development of the projects? And then also, what's your guys' standpoint on mergers and acquisitions at this point in the market?
Interesting question. As a company, we're not going to rule anything out. We've certainly had discussions on potential partnerships, and yes, they range from joint ventures or investment at the project scale for either project, offtake type arrangements, royalty investments, the usual suspects, without any real preferential, path. On where I see the uranium project probably has a better chance of, or joint ventures might have a higher chance of success on the uranium side if your partner was either an end user utility or a current uranium producer, just because of the whole opaque market side of things. I know when Paladin first started production out of Langer Heinrich in Namibia, their marketing was basically non-existent. They chose to sell in the spot market at the time, and perhaps tied themselves too much to the spot market over time. But anyway, that's another story. But it was because utilities will not pay top dollar for an unproven company's potential production. You have to prove yourself before you get better contract prices. So that's one reason why a potential partnership or offtake is probably the way it'll go on the uranium side. And similarly on the lithium side, a lot of the production is tailor-made to the end user. So it makes most sense for the battery production companies or other end users to partner with a potential producer or we'll call it near-term development company once we're there, because they need to understand in depth what the chemistry of the product looks like and all the steps in between. So I see that more on a invest in the project to help finance production as opposed to a joint venture per se.
Ted, talk about Ian Stocker for a moment and how instrumental he was to advancing this project during his time with Plateau. Can you just speak to your relationship with him and how instrumental he was in getting the project where it is today, just before Alex came in?
I don't know how much time we have, but I'll try and be as brief and succinct as possible. So when I was with Cameco, I sat on opposite sides of a partnership table with Ian Stocker in Niger and in Argentina. He was with the junior that Cameco was partnering with, and we were on the technical committees and management committees for these partnerships. When I left Cameco, it wasn't because I left on my own. It was 2 or 3 years after post Fukushima, and my focus was all about growth. New projects, new opportunities. Sort of helped a bunch of big acquisitions for Cameco, mostly in Australia, and they didn't need to grow anymore as far as their project pipeline. So Ted was let go. And within 2 weeks of sitting at home contemplating having a summer off for a change instead of being all over the world looking at things, Ian Stalker phoned me and said he had heard, and we started working together on a little junior called Azincourt Uranium, now Azincourt Energy. And Ian was the chair, I was the CEO, and immediately we went about talking to Cameco to get their Peruvian assets. That took about 6-8 months of back and forth. We did get them for a fire sale, and then we merged in with the existing Peruvian player, Macasani Yellowcake, that now became Plateau Energy Metals. Ian and I worked from 2013 all the way through till he left around the same time that Alex came in, a little bit later. But Ian, basically, he's a processing specialist who fancies himself a geologist, but he's not. And we worked extremely well together. And when we were going through the uranium PEA and resource update and everything else, once we put the companies together, he really drove the PEA process. And similarly, when we found Falcaonia, and yes, it became more of an exploration play again, we immediately, because of Lawrence Stefan, the current COO at Plateau Energy Metals, and Ian, essentially we started leach testing of that material right away, which really accelerated our ability to put out a resource, because these are unique rocks, and you need to prove the potential for some future economic viability to satisfy 43101 resource estimates. So that Ian and Lawrence were instrumental in that, and so I think that's why we were able to take Falcaonia from discovery in November of 2017 through to first resource, and then essentially doubling that resource by March 2019, so 18 months, and then putting out the PEA as soon as we did, just because of the groundwork that Ian and Lawrence and I put together right away. Not too many people will find a new rock and start processing it right away. We normally study it first and then think about processing. And so we unfortunately or fortunately put the cart before the horse and looked at processing. And now we're just starting to understand the petrography of these lithium rocks better. Lithium's one of those, well, it's an extremely light element. It's the lightest known metal, and it's hard to analyze in situ. So we've had to do some laser ablation ICP-MS to study where the lithium is in these new rocks. And now we understand it's in this essentially volcanic aluminosilicate glass. There's no or very little actual lithium minerals. And that's why we're able to process it just using warm sulfuric acid or the other methods that we've tried. But it's a heck of a lot less expensive than most hard rock lithium projects that produce from spodumene lepidolite or hectorite clay. So I think Ian was instrumental in accelerating things and really being shrewd with our contractors for the various PEAs.
Yeah, certainly his successes in the business and really pushing things forward, I think, is he certainly proved that on numerous occasions with various companies. Well, as you know, Ted, the company has about a 22 million Canadian market cap as we talk, and remains substantially discounted. What would you say to potential new and even existing investors who are looking to establish and increase positions with Plateau Energy?
Well, I'd say that we're confident that the concession issues will be returned in our favor and will be behind us hopefully soon. There will be uranium legislation in place in Peru, and this, coupled with improving market in uranium and the future's bright for lithium is like no other commodity at the moment. Eventually, that we have two world-class projects. If I may say that, we're talking low capex, low opex projects. There are basically two paths: uranium, lithium, and all the byproduct potential that we have at Falcaonia. The company's made no secrets, and any astute investor can see that the idea of splitting these two companies based on their potential partners and investor base makes most sense. So these are two great projects that will only get better the more we understand them. On the uranium side, there's no shortage of areas to increase resources. We already have essentially 124 million pounds of resources, and this potential upgrading through scrubbing and screening is only going to make that project get better on the capex opex side. And on Falcaonia, if we're understanding, the leaching and the processing options that we have much better, that will only improve things. There's optimizations, sure, but the byproducts, co-products are only going to enhance the value of Falcaonia. So I'd say it's a great time, and we're excited. We just need to get this concession issue behind us.
Ted, and the best way for the audience to reach out to you and the company?
Well, certainly there's links on our website, PlateauEnergyMetals.com, to get in touch. Alex is our CEO. His email is there on all the presentations. Mine is essentially the same, Ted at PlateauEnergyMetals.com. Always more than happy to field questions and queries. Our investor relations corporate secretary, Pam, is notoriously diligent at monitoring the email web link and passes things along when she can't answer them to the technical or financial side of the company. So yeah, reach out if there's any questions. We're more than happy to answer.
Well, Ted, really appreciate you taking the time, going over all the issues and going through the company. And thanks again for the update. Appreciate you coming on the show, and looking forward to progress and to keep up the efforts.
Thanks a lot, Andrew. It's been a pleasure meeting you virtually and talking with your audience.